All right, here we go. Anthony Meisner's with us again as Brenna's still on maternity leave, though since I'm at home, she's just in the other room watching Seabiscuit and having fun with the newborn. Anthony's with us here from Land Title. It's an interesting, I think, month to review the slides because the interest rates have been going up for a few months in a row, spiked pretty heavily. A lot of the data we're looking at is lagging indication. Okay, what's the impact that we're seeing now today on buyer interest, on things slowing down? Anthony, go ahead and introduce yourself for those that don't know you, and then yeah, I'm curious, how did you and your family choose to spend the fourth?
Well, I'm Anthony from Land Title. I work out of the Boulder market most of the time, but I do a lot in Denver as well. I spend a lot of time with these market stats, which is why Matt and I are doing this together. Yeah, with my fam over the 4th, we just barbecued a couple of times, had some family come in from out of town. It was really low key and, of course, had to shoot off a couple of fireworks, right?
Nothing that actually left the ground, right? That's
Nothing
the
that left the ground. It was all very by the book because, well, I had to let my 5-year-old do most of it. So got to
yeah.
keep it fairly reasonable.
Yeah, don't let the firework lose the 5-year-old lose fingers. That's a good way to never be allowed around any explosive, any fire, anything else moving forward, right?
Exactly. Yeah, and we like to have fun, so we don't want that.
Yeah. Very cool. Um, Tell us kind of about here. Let me get the stats up. So I'm going to let you kind of drive on this, but as we're talking through the real estate stats, the feeling has been right from a lot of real estate agents that I'm talking to that the market's just kind of hit the brakes. But I
Sure
don't think
looks
the
that way
stats
on
are going to
paper.
show that exactly.
No, but it definitely the feel and understanding is finally starting to show up, right? We're a couple of months into this, and we finally saw the under contracts take a dive, right? Pendings went down by 18%. You can see that right here. This is the percentage, but you can see the sharp decline from May to June or April to May to June. And the active inventory is really starting to rise because of that, because for the last couple of years, we've been putting more under contract than we had available, or than we were putting on the market as listings every month. So now, let's just say we put 5,000 homes on the market. Well, we only put 4,000 under contract. Oops, sorry about that. And by putting 4,000 homes under contract, but 5,000 homes go active, then we have an abundance of listings every month, right? So we're going to start to see that over the course of the next few months as interest rates are high enough. We have less buyers qualified than we have active sellers trying to get on the market. So rising inventory rates, or rising inventory because of rising rates, right?
Yeah, Brent and I have been talking about this for a while. That green line, that active line, finally is peaking up here above the other two. And it's been since, I think I look back here into that October of 2020 was the last time that green line is it kind of crossed that threshold.
Yeah, and that's that market that makes it really unaffordable in Colorado, right? You get the active units transitioning more than every month. That's where we have these incredible extreme sales price increases, like 20%, like we saw last year, right? So
Yeah.
that's never great. So we're starting to see that all kind of slow down a little bit. You can see it in the year over year right here, where the average sales price is only up about 12% now. So that's a really good sign that things are starting to slow down a little bit. Maybe some less bidding wars. Maybe if you're a buyer, you can be able to go actually find a house. Like you can shop a little bit. You're not just like, hey, there's one in my price range available. That's the one I'll take, with 25 other people trying to make an offer, right? Nobody wants that.
Yeah, it's kind of nice to be able to go to a restaurant and have more than one option. I think our real estate market has
Yeah.
felt like that, right? It's one of those where you walk in and it's the soup Nazi with one option, and sorry, no house for you, and that's changing,
Yeah.
and I think that's a good thing.
It's a really good thing. Here you can see that obviously at different paces, the counties are transitioning a little differently, right? And this happens with a lot of transitioning markets where, some might transition faster than others. Places like Denver, yes, they had a huge increase in inventory, but with that came a rise in sales. Where other places are like, hey, lots of inventory like Broomfield, 80% more inventory than we had a year ago, right? They're changing really fast. So this is a really good sign for the marketplace. I think if we go over to the month supply, this tells the story a little bit better from like a 30,000 foot view, where you can see, everybody's kind of transitioning at that 40 to 50% per month increase in inventory. But that percentage sounds so scary. The problem is we were at nothing, right? I mean, we were at 1 week. So a percentage change that large is not a good representation of what's happening, right? Just because we added another week or two of inventory over the course of the last month, that's okay, right? And we're probably going to see trends like that continue where, we add another week of inventory over the next month because we just didn't put them all under contract, and we're in that type of market where people might not have accurate expectations for selling a home, and they look at, what their neighbor sold for and they're like, well, I want that. Well, you might not have the same house, you might not have the same condition, and also now they bought it at a lower interest rate in a big bidding war in a market with a lot of buyers. And here we are in a market with a lot fewer buyers, but still a lot of very active buyers, right? And the buyers out there looking, they're hungry, right? The next slide articulates that to a T. I mean, you can probably talk a lot about this from your experience, but the average home in the MLS is going under contract in 10 days.
Yeah, and I remember, and I've been paying attention to this, watching this my whole career, and it's fluctuated give or take around 30 days on average. I mean, there's seasonality in it, of course, but around 30 days. We haven't been up to 30 days since we go back to the first part of 2020.
Pre-COVID.
Pre-COVID. And that was still a seller's market, right? We were still in a seller's market in 2019 when the numbers were there and higher. To your point around, the interest rates, if I want to double my income for next year, but I made $100 this year, to make $200 isn't going to have that big of an impact, right? But that's 100% increase. It's 100% more money, right? So that percentages, when we're talking about small numbers, you got to look at the whole picture. You can't just take the clickbait headline and say, oh, Broomfield has 80% more inventory. Nobody's selling their homes. The sky is falling, Chicken Little.
But there was like 140 houses, right? So
right. Yeah.
Yeah, exactly. And you can see it here, even places like Elbert, where the rising inventory has been catching up to them for a while. And you see it in cities like Superior as well, where certain cities are seeing rising inventory faster, or maybe they started rising in inventory before others, right? So they've had a few more months to kind of get up there. Yeah, year over year looks like 200%, but that's crazy because there's still plenty of homes selling. There's plenty of people putting houses on the market. There's plenty of buyers active. And I think the biggest takeaway here too is just the type of buyer that's in the market right now is very different than the type of buyer that was in the market 3 or 4 months ago, right? I mean, we had people, they would shop, they would write an offer. They didn't qualify to, go above like whoever else. They would get frustrated, right? Now, if they're looking at homes and they're in a price range, they're very motivated to purchase. Obviously, they're still shopping in the first weekend or, within that first week. So I think that this is a really, really good thing for sellers still. So definitely don't be discouraged as a home seller.
No, I think we're, the buyers that are there, to your point, are motivated, right? The folks that were a year ago paying 2% or 3% their mortgage to purchase a home, it was like, okay, well, gosh, we could do it. The money's easy to borrow. Let's just get into that next house just because. The buyers that are moving today, when the interest rates are where they're at, are relocating for, work or personal reasons, right? They are moving into Colorado. You've got marriages and births and divorces and deaths and all those things cause real estate transactions to happen, and they're still going to happen. So it's really important as a seller that your agent understands that they need to find the motivated buyers, right, for you on behalf. And that's really what it comes down to.
Yeah, I couldn't agree more. All right, well, let's get to the next section. This is the price point section. And in Denver Metro, there's a pretty clear divide right now between where the interest rates are having a really big effect and people that are, maybe a little bit more, have the ability to absorb some of that cost, let's say, right? So the big thing here is I think you can see at 600,000, there's a pretty clear line in the sand. under $600,000 conforming loans, when interest rates hit 6% or 5.5% or whatever they are today, that's starting to really put a damper on that monthly payment, right? I mean, your monthly payment might have gone from $2,000 to $3,000 or $3,000 to $4,000. And that's tough, right? That's hard to swallow. So I think that's where the market's being affected the most. And I only say I think that because it's pretty obvious in the data in sales. Now, the other part of that part of the puzzle is those homes have gone up 20% in value in the last year and a half or so, year or so. And by doing so, the tide is rising too. So there's just less homes available. Now, if you look into the luxury segments, over 1 million or so, or even over 800,000, there's a lot more sales taking place than there were in the past. And I think those buyers are just have more ability to actually purchase them. And, they captured a lot of appreciation in most cases, and that's giving them a really big ability to put a nice down payment in.
Yeah, be able to play with those numbers, right? Riding the wave of appreciation the last few years is creating an environment where the folks that are moving and they have a property to sell, they have wiggle room in there, right? Because they still have a significant amount of equity in there. Now, we're still hearing folks saying, "Hey, don't buy real estate right now. The prices are going to come down." But I think the asterisk to this would be, right, the caveat to this would be, is you look at a 2% rise in interest rates, and we've had more than that here over the last 12 months. But for the average home, or let's call $700,000, that 2% equates to the same monthly payment of the home being $140,000 less. And we're not seeing homes take $140,000 discount to sell, right? So the homes aren't crashing in their value, even though the interest rates are going up.
Yeah, and I think we'll see that for a while, right? That's obviously going to create us a little bit of a slowdown, which we're feeling from buyers, but it's definitely not going to create a screeching halt to the market, which I think is what people hear in the national news, that, the sky's falling, all these words of recession, and we're not even in a recession yet, right? It's probably coming, but we don't necessarily even know that. But here we are. Now, this slide tells us a little bit more about by price point, kind of what's happening. This first section where it's month supply of inventory is kind of a stepping ladder. It should look more like this, right? For so long, it's been just, there's nothing on the market, there's no inventory at all. Well, now the inventory shortage is still under that 600,000 mark, but we're starting to see it at least get closer to balance, right? 2 months is nowhere near balance. Balance market being 4 to 6 months or so, right? And we're only in balance at 3+ million. So that being said, like, this is still an extreme seller's market, right? Especially under 600,000. Those homes are moving in 8 days, right? Nothing has really changed. Colorado is very insulated from a lot of what the rest of the nation feels, because we have so much net immigration here, and we have so many millennial first-time homebuyers, because millennials are attracted to this area largely due to jobs and lifestyle, right? So all that being said, those first-time homebuyer products are really tight and they're really competitive.
Yeah, so many folks move in here, right? And I pick on Chicago because most folks that I know from Chicago or lived in Chicago talks about how it's the greatest city in the world. And none of them still live there anymore, right? They've all moved here. It's just, Colorado's a fantastic place to live. And that Colorado lifestyle, getting outdoors and enjoying life, and just the climate allows for people to do so much that millennials have really flocked to the area because they like being outdoors and experiencing those things. So I think that's going to continue. I don't see people starting to hate living in Colorado.
Yeah, I don't either. Okay, so we talked a little bit about that decrease in sales. This is the same thing. It's going to show you a little bit more by county if you look down at the chart at the bottom. The big thing here is all these counties are transitioning kind of at the same pace, right? Some a little bit faster than others, but we still have a long ways to come. If you look at the beginning of 2020, there's a pretty big gap between those Januaries and where we are today. That swing is usually like 2 to 2.5 times from the lowest month in January to the peak of the market. So if we hit our peak in May, we hit our peak a little early this year, right? I mean, we've had some interesting years. I mean, you can't really look at 2020 because, well, we basically shut down the entire earth in 2020. So that wasn't a good indicator. But looking back at 2021, you can really see, the seasonality shift kind of just taking place early this year compared to last year. I don't think there's anything to be concerned about. It's just really important to kind of understand the behavior of the market conditions, right?
When people say that nobody's buying homes, that slide says that,
5,224 people bought homes, in fact, last month in Denver Metro.
4,000 to 5,000 people are buying homes every month, it seems like, right? So
that's right. So don't tell me that there's no one out there purchasing houses, because despite the high interest rates, it's absolutely possible for 5,000 people a month or more.
So for those watching, right, when you're at the water cooler at work and the know-it-all coworker says nobody's buying homes and everything's crashing, right? Go back to this slide, right? Watch this video.
I've got the every month. Even in the worst month, we only had 2,900 people buy homes.
Yeah. We only had 3,000 homes at that point. So
exactly. And there's probably only like 200 on the market. So
yeah,
they were changing every day. All right. So average sales price, this is for detached, but a lot of people are asking about this. So this is at least a place to start looking at. The one big takeaway for homeowners here is, even though it feels like things are slowing down, you made $80,000 on average last year as a homeowner. So did you want to own a house or did you not want to own a house? Rising interest rates, falling interest rates. I feel like the 80 grand is, putting some people in a really good place.
Yeah.
The sold units here. So this is a good indicator for all of you out there. This is the easiest way to see just kind of the shift in the market, like the difference between last year and this year, right? Early on, you saw an inventory shortage that caused a shortage in sales. Then we saw rising interest rates, which we kind of peaked out in May being better than last year, surprisingly, because most markets in Colorado, that wasn't the case. But now we're going to be short all the way through the rest of the year. That year-over-year mark, though, we're only down 8%. We're probably going to trend higher than that. We'll probably be somewhere like this 15 to 20% down over the course of each month going forward. I feel like that's just like an educated guess, right? You can kind of feel it in the market. The interest rates are obviously creating some of that friction, and we're seeing that rise in actives. So all that being kind of put together, expect us to land somewhere between the 8% we are now, but probably closer to that 15% or so.
Yeah, we're still going to see people that are moving and buying homes, and even back in 2008, if we were to go back to the data in the Denver metro area for the numbers, it wasn't 80% fewer homes sold. That number was under 20%, I would guess, right? And I don't have that data, and I'm sure somebody could find it somewhere, right? But here in the Denver metro area, probably under 20% fewer homes sold. 2008, 9, 10, right when the housing bubble burst.
Right. And I think the big takeaway too is, remember 2017, 2018, what that market felt like? We're just trying to get back on track to somewhere in there. Like that's where the market conditions are pulling us. 2019 was an outrageously good year. There was actually inventory on the market. You had a ton of booming millennials moving in here, all this net migration. People forget that was like the best real estate market pre-COVID we'd ever had. And then COVID made it more extreme than that. So I think it's really realistic to see us back at those 16, 17, 18 levels here really, really shortly.
Yeah.
All right. So last slide, Matt. This is always the fun one. It's the elephant in the room. Everyone's like, how are the bidding wars doing? It's so exciting, right? How much am I going to get for my home? Well, the biggest caveat is this is sold data, right? So sold data is under contracts that went under contract probably 30 days ago or so. So 30 to 60 days ago was affecting this data today that we're looking at. And the big thing about that is, where have we been trending, right? April, we peaked, right? The April market was awesome. It was almost 107% listed sale price. It was super cool. And it was the largest bidding wars we'd ever seen in the history of Colorado. And here we are kind of on the downturn. Well, that downslide still puts us in the best sellers market in the history of Colorado, right? So I wouldn't steer people away. The other craziest part about this is that 1 to 2 million mark, that luxury price point, or those higher end homes, those bigger houses, they're having bidding wars still, right? 103.9%, the whole percentage point above is actually quite a bit, right? It takes a lot for the average to move 1 percentage point. But expectations going forward, I mean, you're feeling it in the market. I'm feeling it in the data. We're seeing it. We're definitely coming back down to reality, right? I like that. I think that's a really good thing.
Yeah, and I'm with you 100%. It just this graph as we look at 2021 and the start of 2022, this was a frustrating thing to go through and a painful thing to kind of experience, because you're talking to buyers and saying, have no idea where it's going to go, because we're looking at this average at 104, 105, 106%. But the really nice home that you want, that's going way over that, because it's the home that's not nice, that nobody's after, that's bringing that average down. And now we're seeing that start to tick back down to where it should be. It should be right about in the high 90s for consistency with pricing and making sure that things feel balanced and it's not out of whack.
Yeah, I think if you want to consider that 4 to 6 months of inventory and where does that land and how does it look here, a balanced market is like 95%.
Yeah.
Right? So if 95% is 6 months of inventory, or let's call it balance. I mean, this probably actually articulates balance a lot better than the months of inventory. But if that's balanced, then we are way off of balance still, right? And I mean, you see it in the luxury market, you'll see it swing to 89%, right? When it's a buyer's market, when it's in a different time, not 102.5% like 3+ million got this month. It could literally be 90%. So these are awesome times to get homes on the market. I really think it's important to price it correctly, make sure it's buttoned up. People want move-in ready. I mean, it's always like this, right? If they do the paint, you do the carpet, its curb appeal is awesome, you're going to get top dollar for a house. And in this case, in this scenario, you might just actually sell it first weekend, right? Or you might sell it in first, second weekend. Not necessarily bidding wars or whatever, but reeling those expectations back into reality, I think, are really good.
Yeah, the presentation matters, the pricing matters, and you price it ahead of where the market's going. If you're trying to throw that anchor and say, well, I want to stick to the where people were going up and bidding crazy, well, you're going to anchor that and not move forward. You need to be ahead of the market so that you can get it sold, right? You do a couple things to touch up and make the house look nice. Make sure that it's staged properly. You take great photos, have an agent that understands marketing and how to push it out there. Still, no matter what, get your home sold the first weekend. And way back to when I bought my first house, which was a buyer's market, that's what the seller did, right? They priced kind of ahead of where things were at. It showed well, and they got multiple offers the first weekend, right? I just happened to win on that, which means I was willing to pay the most at that time.
Well, you probably felt crazy too. That's like everybody else in these markets. But in all reality, you pay top dollar for a house, you get a good house, you stay there a long time, you build a lot of equity, and that's exactly what homeownership is about in the United States.
Yeah, absolutely. And it worked out well. In fact, I would like to buy that house probably 2 or 3 times over at the price I paid for it.
Yeah, I couldn't agree more. I totally understand that sentiment.
Yeah.
Well, that's all I've got for you as far as the data. We could look at the attached market, but the attached market is trending almost exactly on line with detached. So I think it's well to say that we're all on this ship together.
Agreed. And for those that own a home, that are buying a home, keep in mind the home that you're selling in is the same home you're buying in. So if you're moving up, you could take advantage of maybe some of those prices a little bit more aggressive on the buy side. Things are good and healthy in our real estate market, and I think they're balancing, which is good. We didn't hit the brakes and let the market just fly right by.
Yeah, absolutely. I think this is an awesome time to buy real estate. I will still be looking at real estate, as you probably are too.
Yeah, you probably have a second monitor up right now as you're scrolling through and looking at real estate, right?
Yeah, the MLS is over here.
So Anthony, I appreciate you filling in here while Brenna's on maternity leave here with the little one, and good to see you. I'm excited about where our market's continuing to go, and I think it's going to feel right like things have slowed down more than what the numbers are actually doing.
I agree. So yeah, thanks for having me on. Appreciate it. Enjoy that little one.
For sure, will do. All right.
I'll catch you next month, right? One more time.
What's that?
We got one more of these, right?
No. So just the two. We're 2 and done, Brennan.
Well, thanks for having me. It's worth it.
Yes. Sorry, Brenna corrected me. Yeah, we're done at 2 kids. You and I have one more video before Brenna's back.
One more video. That's right. All right.
Cool. All right, Anthony. Well,
Catch you later,
again,
Matt.
thank you so much. We'll catch you next month.
Sounds great. Bye.
All right.